Hi and welcome to Swissquote's Daily Market Talk. It's Tuesday, November 18th. Markets are wobbling as slowing global growth, rising debt and fading AI enthusiasm collide. Buys are nowhere to be found these days and appetite proved to be hard to revive even with lower tariffs for beef and tomatoes in the US and massive fiscal stimulus package from Japan. So all eyes are on Nvidia to save the week, but even stellar numbers there may not be enough to revive the bulls tomorrow. So Nasdaq futures are sliding this morning at the time I'm talking here. Oil is stuck near the $60 per barrel level and gold has lost its momentum as well. So we will talk about all that and more. But before we do, and as always, keep in mind that opinions are my own and this is not financial advice. All of a sudden, economic data pointing at slowing economies around the world and piling debt from the DM countries especially start making investors uncomfortable. And for a reason, of course, because Japanese economy printed its first quarterly contraction in over a year earlier this week, shrinking nearly 2% during the third quarter. The Chinese property crisis continues, even though we don't really talk about it. Consumer spending remains weak, and the 25% drop in shipments toward the US is hard to replace in the very short run. Then the European growth obviously remains slow and bleak. Military spending doesn't show in the overall growth data, and even in Switzerland, we are doing quite poorly because if it's any comfort to anyone, even the Swiss GDP contracted 0.5% for the first time in 2023 in the third quarter, and believe it or not, state workers in Vaud and Geneva are on a strike today. Now, the good news is that all the worries that I just cited do not necessarily have a negative impact on investor sentiment generally, because markets tend to move on a different set of vibes, and slowing economic fundamentals is not always bad news. But the bad news is other and bullish vibes for investors such as AI appetite, monstrous government spending, and dovish central bank expectations are weakening as well. And that's not really great. So first, AI appetite is being hammered these days by the circularity and AI bubble worries. Besides the US Nasdaq, for example, that closed the session below the 50-day moving average on Monday for the very first time since the 13th of April. The South Korean and Chinese technology-heavy peers are also having hard time slowing the outflows, despite the news that the South Korean giants, including Samsung, SK, Hyundai, and LG, promised to invest around $550 billion worth of funds in countries' AI chips, energy, and biotech over the next 5 years. And in China, Alibaba has just released its new Qwen 3 model, somehow spurring worries that the latter could compete with the very ChatGPT. So let's say this right away. I like to have a small parenthesis here because I love Alibaba and I love Chinese technology. But when it comes to competing with the Western peers, I am not very much convinced. And that's certainly because I live in China. So every time a new chatbot or a new upgrade pops up in China, I have this little ritual. I ask it one simple question. What happened in Tiananmen in 1989? I know it sounds provocative, but I don't do this to be provocative. I do it because the reaction of the chatbot tells me everything I need to know about whether that model can genuinely compete with the Western chatbots. So if the bot immediately calls me inappropriate question or sensitive content, cannot answer, well, that's when I know that the Chinese propaganda filters are doing their job a little too well. And for Alibaba's Qwen 3, well, it yesterday gave me the answer of too sensitive content. So I just think that this model may thrive in China, but globally it is not playing in the same league as OpenAI. Whether that will help OpenAI and OpenAI bros feel better, I'm not so sure though, even less so as the direction the Federal Reserve expectations have taken lately is not so much helpful. So this brings me to the second point that's not helping with sentiment, and that's the dovish Fed expectations. They have been crumbling on general realization that the Fed may not cut the interest rates come December. And pricing in Fed funds futures today suggests that there is a greater chance that we won't get that Christmas rate cut from the Fed than an additional 25 basis point gift. And even the news that Donald Trump was kind enough to reduce tariffs on beef, tomatoes, and bananas to soften the cost of living for everyday Americans will not give the Fed the green light I believe it needs to move further this December. And the third thing that's not helping either is that Japan has just dropped a monstrous 110 billion worth of an economic stimulus package under the new and very Takaichi, aiming to boost growth with tax cuts, direct aid to communities, but also by investments in key areas including AI, chips, defense and military, and shipbuilding. Now, normally, this is the kind of news that could provide a sugar rush and bring investors back to the market. But in vain, not this time. This time, the Nikkei doesn't even blink on the news of this massive stimulus package, as the focus is more on the Japanese 30-year yield that spiked above the 3.30% level yesterday since the announcement is out, making all this extra spending from the Japanese government much more expensive in the coming years than just last few decades. So the dollar yen also returned above the 155 level and will most probably push toward the 160 level, even with the looming threat of direct FX intervention from the Japanese officials. So what's now? Everybody is waiting to see if Nvidia could reverse the market's fortunes later this week. So Nvidia, when it will be releasing its third quarter earnings tomorrow after the bell, will announce probably another stellar quarter. There's no doubt about that, really. Analysts are projecting a revenue of roughly $54.8 billion for the quarter, which would be a 50 to 60% year-over-year growth with a gross margin around 73.3%. So it's all very much good, but there is no guarantee that the set of excellent and stellar results, and certainly better than expected results as well, will bring the bulls back to the market when even SoftBank and Peter Thiel dumped their entire stake in Nvidia recently. For Nvidia per se, well, the business will certainly keep booming as AI investments outside the OpenAI circle will also be growing. Think of Middle East and all the European contracts that are to be made here. But for the rest of the OpenAI buddies, it feels like careful stock picking will be on the menu over the next few quarters. And companies that accumulate debt to grow are increasingly unload. And I am looking at you, Oracle, while big and cash-rich players like Google, for example, may continue to hold up better in this weakening appetite environment. So looking at Oracle's rapid decline following the September peak is a clear warning about what I just said. Even its 30-year bond price tanked more than 10% since its issuance. So it is alarming because if you look at Google, during the same period, it extended gains. But from here, still, what will a better performance look like in an environment where investors dump their AI bets is still to be seen. So Nasdaq futures are leading losses again this morning, as quite a clear hint that today's trading session will probably not be better than the last few days. Crude oil, on the other hand, is struggling near the $60 per barrel levels, with top sellers not looking willing to let the bulls gain any field above the psychological level, while gold offers no relief whatsoever. Where are the bulls willing to buy gold above the $4,000 per ounce level now that the momentum has weakened? So let's pray that Nvidia gets something massive and extraordinary out of its hat on Wednesday so that everything could go back to the good old shiny days. But this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow. And until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.